Let me tell you why I hate stocks. I bought a stock recently and it doesn't perform like Nvidia or the S&P 500. If I sell it right now, it's going to cost me a ton of money in the process to get rid of it. That's not a financial product to me, that's a trap. The worst part about all of it is that the person that sold it to me was somebody that I trusted. Hey, it's Rob with Perfect Spiral Capital. While my intro is a little bit inflammatory, it is not actually true. However, that is how many so called experts and influencers in the social spaces today tend to treat a lot of different financial products without proper context or actual facts. Today, I'm going to do a reaction to a recent post I saw from a fairly prominent financial page on Facebook. The people or person that is running the page generally seems to do a pretty good job of trying to steer people in the right direction. However, when I see such a blatant disregard for facts or information and such inflammatory comments used with the sample size of one, it really makes me call into question how good that actual advice is. So I wanted to do a reaction to that today and give you a little understanding of some context and how context helps us see maybe what's really going on or maybe seeing it from a different perspective. So let's dig into this a little bit. Here we have the overall complaint made by this individual, and they're talking about a whole life policy that they had purchased some time ago. And I want to walk through some of the facts that can be kind of be pulled out of this complaint, so to speak, in that it was purchased in 2019. The annual premium for this whole life policy was $1,041.72, or in this case, they're stating that they pay monthly for $86.81. We don't know what the death benefit is. We don't know what the purpose of this policy was or why they took it out. We also don't know the age of the person that's insured or the health rating class of that person who was insured. None of that is actually known or disclosed in this post. The other things that we do know, the premiums paid up to October 2024 were $5,903.08, and the cash value that it had accumulated over that time was $1,953.97. They also claim then that the policy was in force for about 68 months at the time of this post. So there's a couple of things that I can ascertain from the poster's comments here. Number one is that I want to highlight is that the poster claims that they lost money. Well, they didn't actually lose money, considering that the cash value is actually the net present value of the death benefit of that particular policy. So this person is insured at the specific guaranteed level of death benefit in which they signed up for this policy. Again, we don't know what that is, so we don't know what the design, goal, or understanding was at that time. And we also can tell that this person thought of this policy as an investment. And that is the complete wrong way to think about any type of insurance. Insurance should be thought of as a transfer of risk. And a whole life policy is definitely the best way to transfer risk because it is a unilateral contract that transfers all of the risk in terms of death to the insurance company for a guaranteed death benefit payout. And that lasts so long as the premiums are paid for the entire lifetime of the individual. Beyond that, there are lots of problems here with this statement that we can see. Insurance, number one, as I just said, is not an investment. It's about reduction of risk. Not to mention the death benefit or what the purpose of this policy was for is not stated. We don't know what that context is, and that's really important in understanding somebody's situation. It also seems to be a very basic whole life policy, likely from a stock company based upon how slowly the cash value is accumulating. It's not that these are necessarily bad. It's simply that using a different vehicle, meaning, say, for example, like what we work with here at Perfect Spiral Capital would be a mutual company that pays dividends on their contracts. It's going to look significantly different over time, particularly even over a 5-year time frame. The last item that I think is really important is this client did not seem to understand what they were signing up for, and now they're wanting to cancel. It seems as though the agent did not have an at-length advisory type conversation with this individual about the goals and needs that the customer has or wanted this thing to do for them. And that's a big mistake. That's a big problem in this industry as a whole. And I think, unfortunately, the insurance industry they earn a lot of that criticism, and they deserve it in some respects, because people are not taking that time to really understand their clients, really understand what's going on, and help them see what products might be a good fit for the things that they're trying to do and trying to solve for. And that advisory conversation is so critical to helping people understand what they are trying to purchase, why they want to purchase it. It allows them to really understand the educational aspects that are needed in order to use an asset in a way that is going to best benefit them. So those are kind of my statements around the complaint that the person had lodged. Now let's dig into my bigger concern overall, because certainly in this case, one could say that most of the issue kind of falls on the individual for not understanding what they purchased, as well, and more importantly, on the potentially their agent and who they worked with for not going through the right process steps to understand the product appropriately. But let's dig into my biggest concern. In this situation, we can see that this person just flat out claims they hate whole life insurance. And they kind of reiterate some of these reasons of why they hate it. But they're kind of making some broad scale generalizations, kind of like what I was doing earlier when I was talking about stocks. And we can see that this person is making this big jump to claim that all of this product type is actually bad. I don't have any other way to say it than it's misleading in many ways. In this case, the comments are really just grossly irresponsible. It's really just a lack of objectivity in using limited data and a limited case, limited case study as a source of information. The response here really reminds me, or kind of can be thought of in a way of saying, like, somebody bought a stripped down Mitsubishi Mirage, for example, nothing against that car, just using it as an example, and really expecting that car to be a high performance automobile, and then claim that all cars are bad. Like, that just doesn't make any sense, right? In this case, this is one brand of car, the insurance company, with one model, meaning that the product, the policy, or the product and the design, and then making a judgment call that all cars are bad. The entire market space of whole life insurance is bad based off of this one example. And that's just not true. And it's simply misleading thinking about products in this particular way. Going back to the original example of opening this video, it's like somebody buying, XYZ stock and then getting super upset because it didn't perform exactly like the S&P 500, or it did not perform like Nvidia has, and saying it's terrible, and now they hate all stocks and no one should ever look at any stock again. Again, really bad advice in a lot of situations. This type of communication from so-called experts and influencers is just horribly misleading. That being said, I can appreciate why many consumers do get misled, because a lot of these people speak very loudly, they speak extremely confidently about some of these things, and they have platforms that make them seem as though they have some level of authority on some of these topics. My job, what I try to do, is spread education. I want people to really dig into things and understand it. When we do that, when we learn more and we expand our horizons, we can see more of what's going on. And when we have the ability to see what's going on, we will know what to do, much like Nelson Nash has communicated many times in the past via his book and his seminars. This is also why I really take the amount of time I do with my clients to help them look at different options that might exist for their particular situations. But before we ever get to that point, it's a lot of understanding on my part. What are the goals? What are the dreams? What are the things that someone wants to do? And how does a particular product fit into that overall scheme of what they're trying to do? That's really important. And then coming alongside a client and making sure they understand every aspect about a product they might be looking to purchase. That's how we at Perfect Spiral Capital like to really take things, and how I like to work with my clients, so that they understand every aspect of what they have and how they can use it for their advantage. In wrapping up today, certainly don't make these same mistakes that some of these influencers are doing and make broad scale uh, generalizations or jump to conclusions about products simply because you have one limited case study. Take the time to research, take the time to understand, and really dig in and find out for yourself how things really work and how some of these products really work and see if they actually fit your needs. So I hope this reaction was a little fun for you today, but also informative. And I just want to challenge you, go out there, do the education on your own, seek professionals who are willing to come alongside you and help you and educate you. If you have any questions, feel free to check out the links in the contact information for this episode. Also, feel free to email or leave comments. I'd love to hear from you. Let's chat about it. Let's talk a little more. With that, have a great day, and thanks for watching.